Marty says, when you're using the 20-day SMA as a filter for your credit spreads, let's just go to bull put credit spread. Let's go to search. And let's go to the preferred criteria here. Okay, and you see here we're using a stock price greater than the SMA 20 and a MACD cross signal that has to be positive by at least 3 days. Okay, so that's in the technical indicators here. So Marty's question goes on, is there a certain period of time that you look for the price to be above or below for bull put, bear call to confirm the stock is a good position for a trade? The answer is no, but I would like to see something. I could do that, Marty. And what I might do here, well, how many results do we have? We have 23 results, starting off with Dollar Tree, Texas Instruments, Palo Alto, Enphase. All right. We do have the ability to add that filter, Marty, if you want. You see here down below in the technicals and the historical moving trend, we have the number of days the stock crossed the SMA 20. Let's say I wanted to make sure it was at least 3 days above the SMA 20. It's been over for at least 3 days in that case. And I have 22 results. Dollar Tree, Texas Instruments, Palo Alto, Enphase. So we lost one somewhere in this list, but not on the first 4 that came up. Part of the reason, Marty, that I'm not using that in this default search, and again, let's go back to the default. That was the weekly bull puts and be the same on the weekly bear calls, looking for stocks trading under the 20-day moving average, is because of the other technical indicator I'm using. Because I'm looking for a MACD cross signal that's at least over 3 days, Marty, that usually, it doesn't ensure it. It doesn't always correlate, but usually most of the positions will also be at least 3 days, 4 days, or 5 days above their 20-day moving average to match this crossover period as well. When you see one, you typically see the other. I prefer to see the MACD. That's why I set it. But again, I just showed you could use the number of days above the MACD. That it's been above the 20-day moving average if you wanted to do that as well, using the filters here in the historical simple moving average trends. Or, if I wanted to make sure the 20 was at least 3, 5, or 10 days above the 50-day moving average for a stronger bullish trend, I could put that in as well. But since I'm using the MACD cross signal, positive MACD cross signal in that case, I don't need to use the SMA 20. But yes, when I look at a chart, let's just take Dollar Tree. And this is for bull puts. We do the opposite for bear calls as far as the trend lines go. But yeah, see, here's how I have mine set up. I have it set up with the Bollinger Bands, 3-month chart usually. So I've got my upper and lower Bollinger Band. Just point those out. I'm sure everyone knows they're there. So here's my upper Bollinger Band, and here's our lower Bollinger Band. And then, of course, what we have in the middle is our 20-day moving average because the Bollinger Band is based on a 20. So here we're at least a good 1, 2, 3, 4, 5, 6, 7 days above the 20-day moving average. And it's hard to see, I know, but almost the same amount of time that the stock has seen a positive MACD crossover in that case as well. The crossover started right about here. There was our positive crossover. And then we did see a downdraft of the 20-day moving average there, a quick jump down, but then it's been moving consistently up since then, Marty. Great question. And you can do that functionality if you prefer to, Marty, inside the search tool again, using that technical field for the day's cross. But since we're using the MACD, I don't feel the need to use both. But I will check the chart as always, and I'm sure you will too, just to make sure it is going. It's not just suddenly just jumped up or spiked up and run up 40 points or so. I'd like to see a more gradual increase in consistency, which has been hard to find in this market as well. Okay. And the follow-up question to Marty is also, what time frames do you typically use on your charts for trading the 18 to 17 days to expiration trades? Sorry, I'm just always at a default of 3 months, okay? And, let's go back to that. I kind of answered your question earlier. But yeah, I just tend to use a 3-month chart because there's some things that I do want to see. And this one doesn't really show. This is an expectation of what happened in January, but this stock here, Dollar Tree, has been doing pretty well. We know about what's been going on here, but since then, it's been doing fairly well as a trend, and that's what I like to see. I'd like to see it be more consistent over the last month and a half or 2 months. I'm going to be honest, you're going to hate this phrase, but I got to take what I can get in this market. By the way, I am not necessarily opening new bull puts next week. I had 2 expire worthless today that I had in bull puts. one of the three I had opened for this expiration, I had to manage, and I decided to just close it. I took about a 40% loss on the max loss on the spread for that bull put. It was TTD. It would have been an 80, 90, 100% loss if I held it to today. So I saved most of that. The week prior to that, from last week's discussion, you saw some of that, is that two of the four positions I had open, one of them was for this week's expiration, but the other three positions, two of them were managed with the pendulum adjustment, moving the bull put to the bear put debit with one swing. Both of those ended up profit. The other position did expire worthless. That was from 2 weeks ago, I think, from the fourth expiration. So right now, I'm a little hesitant with all these positions closed out now in that portion of my portfolio, since I had to manage close to, what did I manage? I managed one I closed for lost, two I managed to the bear put debit spread. So yeah, 3 out of the last 7 positions I opened had to be managed. It's a little hectic right now, so I think I'm going to pull off on opening new potential spreads next Monday, unless there's good news over the weekend. The opening is rather tame. Things seem to be settling down, or some great news comes out over the weekend that we've been hoping for potentially, and then I might look into it in that case. So why a 3-month chart is what in most good market conditions that we mentioned before that we'd like to see, when the VIX is falling, Marty, VXX is falling, I wouldn't like to see this. This would make me a little bit nervous if I just looked at this chart and had no knowledge of what the market conditions have been, in the last 3 months, what happened in January, what's been happening overseas, what's happening with inflation. I'd be concerned with this chart going, even though it's been showing me a good trend over the last week and a half, 2 weeks. This would be a concern for me if I didn't know what had been happening the last few months in the market. Let's take one of the next ones. From our bull put credit spread search. Union Pacific has probably been pretty good. Conoco has jumped. Why? Let's just take a look at the Conoco chart. Yeah, see, this is more of a chart to look for. Yeah, there's a little dip here, but not as extreme as what we just saw with Dollar Tree. This is a little bit dip here, but it's been more or less consistent, and we know why it's been moving up with the current market conditions, because it's ConocoPhillips and what's been going on with the oil industry. Caterpillar had some rough times, I think. Yeah, this is more akin to that Dollar Tree. This one would make me nervous. Is it above the 20-day moving average by 4 or 5 days? Yes. It has a positive MACD crossover for at least 3 to 4 days? Yes. But for an 8 to 17 day out trade, everything leading up 30 days or so before this new strong recovery, that is making me hesitant. That would probably make me personally hesitate on this position as a bull put credit spread. I'd like to see more. Can I miss an opportunity by overanalyzing this? Absolutely. I understand that. I'm willing to admit that, but I'm not 100% confident with this because it's just been a good run up the last 8 or 9 days in this position. Now what I'd have to do, Marty, I'd want to know, why was there such a good run up over the last 8 or 9 days on this position? Was it because of good earnings here or good earnings here? Was it something else related to Deere that came out where it started to perform better? In that case, I think, I'm on Caterpillar, not Deere. I'm sorry, I'm on Caterpillar. Okay. So I'd like to know why this sudden turn of events started to happen back here. Yeah, the market was bottoming out just like we saw with that one run on Dollar Tree. But this was going in a terrible, terrible trend for almost 2 cycles of the 8 to 17 day trade. It's about 30, 35 days before it recovered. I want to know why it recovered. I just don't want to look at the chart. What happened and why is this recovery here? And does that give me enough confidence for another 8, 12, 14 day out trade going forward? And what strikes were we at on that one? CAT is the 195, 192.50. Okay, so let's clear our drawings out. Where are we talking about here on this one? Okay, so the 192.50. Oh, that's 197. I'm sorry, folks. My apologies. There we go. Yeah, so we're talking right about here. And just 10, 12 days ago, it was below that line. So why has this movement now occurred? But honestly, I might just, if I'm opening from this list on Monday, and again, I told you I'm not likely planning on it. Excuse me. Oh, it's a 195. I'm sorry. 195, 192 and a half. But I might just, if I came down to this one, I might just skip it and look at Union Pacific now. And does this one have more of a chart that I'm comfortable with? Nope. it was good, but it's been all over the map too. This isn't the consistent trend that I'd want to see in this case. I don't know if I'd feel comfortable with this one either, Marty. That's all part of the process of going through the selection. Yeah, I know all of these match the technicals I want, the fundamentals I want. Could I absolutely use that historical trend we just talked about to make sure that it's been 8 days or 9 days over the 20-day moving average and take more of these out to save time with my research? Absolutely. But I want to take a look at each one. Let's go 7 days. It's been at least 1 week that the stocks crossed over the 20-day moving average and held that. And we took out a few, but yeah, Union Pacific's still there. I guess I didn't put it in far enough. ConocoPhillips is still there. So we lost a few. We lost a few in those first four. Enphase is still there as well. So, yeah, Lockheed Martin's in there too. U.S. Steel is up there also. So it's another way to help you save time, absolutely. Just in normal market conditions, if I've got the 3-day MACD, I've usually got a 3 to 5 day, 20-day stock above the 20-day moving average, Marty. And again, on the stock chart, this is just what I prefer. I'm not saying it's the best chart in the world, but for the technicals I like to use for my married put positions, for the bull puts, for my calendar spreads, that's why I have it set up to look at a 3-month out chart, like using the SMA 20 as the middle line, because I'm using the Bollinger Bands as well, based on the 20-day. I want to see the MACD, and occasionally I have the RSI in there as well. But that's what I like to look for. I know there's several other things I could select here on big charts for more pronounced, some more technicals, but this is usually what matches most of what I want to see for all the different strategies as a basic starting point. For bull put credits, for bear call credits, diagonal calendar spreads, the married put positions, Marty, even standard collars. That's what I like to look for here. And everyone has their own way of chart reading, and there's other charting services that I know are better. You might have even at your broker. In that case, Big Charts is not, I'm not saying Big Charts is the best one, but it's a great one to use because we can link to it for free, and it can be customized as well. And what was it, a couple of, a year and a half ago, we added that other one based on a customer's request using the stock charts feature. And this one, I don't think I have stuff saved on. I do have the MACD on mine, but I think that comes in as default. And this one is still a good charting service to use. It's just a lot of things tend to pop up more often than they do on big charts. So, I prefer to use big charts because I'm not getting bothered with some of those jumps. Of course, yes, I can use the ad block feature or certain things of that nature on my browsers, as well as other tools also.